Welcome to the Pot of Gold podcast, where we talk about finances, wealth generation, and real estate investing. Today on the show, I have Mr. Jason Bates, who is a buy and hold investor who focuses on things like RV parks, boutique hotels, and vacation properties. He's also established a fund for accredited investors called the Venture Vibes Fund. He runs a transaction coordination business. He's part of Sub2, Gator, Top Tier TC, and Vina Jetty's mastermind. He also has a 5th degree black belt in Kenpo karate. How are you doing today, Jason?
I'm doing phenomenal. It's an incredible day to be in real estate.
Definitely is. And I'm really glad that you came onto the show. Why don't you tell us a little bit about yourself? I mean, I kind of introduced you a little bit, but how did you get started in real estate investing?
So a couple years ago, I was kind of looking at my 401k and I was looking at my retirement and going, man, I don't know if this is going to be enough. Right. And then, of course, you're always hearing people talking about cash flowing assets, having assets that'll pay for itself over time, having assets that'll accumulate in value. And so, of course, my radar, automatically goes on to real estate. And so 2.5 years ago, I bought my very first fourplex, and I bought it conventionally, and you jump through all the hoops and you're putting up all your finances and you're giving up your firstborn and, just for the luxury of owning a real estate asset. And so my partner and I looked at this and we said to each other, there's no way we're going to scale this quickly, but at least conventionally. And so I remember it was Black Friday, the day after Thanksgiving in 22. I'm just been watching Pace Morby on YouTube. And I go, okay, there's definitely got to be something to this. So I just went on and signed up that afternoon. And my partner and I, we told ourselves we're gonna get our first creative finance, whatever that looked like. I didn't care if it was sub-2, seller finance, hybrid. I didn't care. We're gonna get our first property in 3 months. And as it was, we got our first creative property in February. We went on a contract in February of 23, and that is probably our best cash flowing property. We pay $551 a month, and it rents for $24.50 on the west coast of Florida. So that got the excitement going, right? And so we ended up buying, for a total of 2023, we bought 2 properties, sub-2 and 2 seller finance. And then we ended up selling a property on a wrap at the end of the year to an investor that was looking for a property that wasn't cash flowing because he needed a serious write-off. And we needed to get rid of a property that wasn't cash flowing. So it was a win-win. And we found them in the sub-2 community. But the real conversation happened at the end of 23 when we looked at each other and we go, oh, wait a minute, this just isn't happening fast enough. We're becoming impatient. And then we decided then and there that we were going to get into multifamily. But of course, we knew nothing about multifamily. But you know what it's like when you put the intentions out there in the universe, you figure out a way that, things eventually come across your path. And we were on Instagram and we saw a video by Vina Jetty. And of course, we'd seen Vina speak a couple of times with Pace and vice versa. She was having a 1-day class in Scottsdale, Arizona, and it was on a Saturday. And at the time, we both had W-2s and we thought, well, that was perfect. We'll just jump in the Jeep. We were living in Colorado Springs at the time. We zipped down to Scottsdale for this 1-day event and we signed up for her mastermind and never looked back. I mean, if her program basically, if there was a playbook in a binder, she basically opens it up in front of you and teaches you all aspects of multifamily, from securities to fundraising to asset management to property management to finding the deal, underwriting the deal, structuring the deal, buying the deal. I mean, the whole 9 yards, front to back, top to bottom. And so it has just been an amazing journey so far, and I'm so excited to see where real estate takes us next.
Yeah, that sounds really exciting. So basically, you have not been in the game for very long, but already you've got quite a few properties under your belt, if I'm understanding that correctly.
Yeah, I mean, because the biggest advice every leader in any kind of business, whether it's real estate, business, personal development, all of them say you got to take action, right? So that's why we made a point that we were going to get our first property, 3 months after we joined Pace's community. Because if you're going to, and I would give this advice to anybody, if you're going to spend any money on anything, you got to figure out how quickly you're going to get your investment back and how you're going to monetize the information you've learned. If you haven't answered those 2 questions, don't even bother buying the course, joining the group, following the expert. Don't do any of that until you decide first, how are you going to recoup your money and how are you going to monetize that knowledge going forward?
No, that's excellent advice. In fact, when I first joined Gator, I wasn't positive if I wanted to do it or not because I wasn't sure if PACE was a scam or not. I'd never done anything like this before. And so I joined Gator, and because of the things that I learned in the program, I gave myself a goal to buy my first house before the end of December. And I wanted it to be a sub 2 or a seller finance, but because I didn't know very much, I also understood that even if I couldn't find something, I needed to make sure that I was giving myself a deadline. And so what I did is I told myself, even if I can't find something like that, I will buy the first house my wife is willing to live in. And so we ended up with a little townhouse by the end of December, and I was able to get out of that analysis paralysis that I'd experienced for like 4 years up until that point. So definitely taking action and setting yourself a deadline is an excellent way to do things.
Well, I love that for you because you did it as a Gator student. Gator is a wonderful program, but it doesn't teach you the in and outs of buying real estate creatively.
Yeah.
And so the fact you took the knowledge that you had from Gator and the relationships you built from your Gator business turned into the opportunity for you guys to buy your home. That speaks volumes to your character as well. So well done.
Oh, I appreciate that. So you mentioned the fact that you ended up selling one of your properties. What does your portfolio look like right now?
So right now I've got a single family in Colorado. That's a long-term rental. I got a single family in Florida. That's a long-term rental. And then I've got a short-term rental in Scottsdale, Arizona. And then that property that I sold off was a fourplex in Colorado. Like I said, it's just one of those where as long as I had a property manager, it wasn't going to cash flow, and I couldn't manage it myself. So, but if you could self-management, it could be a good investment. I had bought that before I knew all the things like the war chest and, setting money aside for, property management, all those other things. And so once I realized that I was in over my head on this particular property, meaning that I wasn't going to get it to cash flow, because at the time, I had a full-time job and being a landlord just wasn't in the cards. So luckily I found an investor in the sub 2 group who had a phenomenal year. They had wholesaled a whole bunch of properties, and their CPA said, please buy some assets so you have some write-offs. And so we were able to close on that one on December 29th. So that, he needed to close on that before the end of 23. And then we were able to get rid of it. So in January, we didn't have that bill anymore.
Okay. And you mentioned along the way about a wrap. Is that the same property that you sold?
Yeah. So I sold it on a wrap. So I went from paying $1,000 or $2,000 a month just for the luxury of being able to say I own it, to being able to sell it on a wrap, and I'm only putting $100 or $2 in my pocket, but the offset is well over $2,000 because I'm not hemorrhaging on that anymore. And even if I'm doing a couple $100 a month in my pocket, at least I'm not paying out that payment anymore. So it's not an anchor.
Could you explain exactly what a wrap is for our audience and for those people who wouldn't understand what that means?
Yeah. So that property was bought with a 4.75 interest rate, and then it had an existing amount left on it. So what I did is I basically sold it for what was still owed on it. So I didn't put any additional, profit on top of it because it really didn't have any equity, and I just upped the interest rate. So I turned around and sold the same exact property with the same exact price tag that was left. I asked for $10K at close of escrow because we needed to pay off a credit card we used to rehab the property. And then I took on like a point or two. I added a point or two on top of it. And so we pocket $200 a month.
Okay. So you're basically making a kind of an interest arbitrage with that.
Yeah. So basically it's already existing. Everything, it's already got a note in place and all that. And all I did was add another point or two on top of it. And even still today, it's a great deal because interest rates are still hovering around 7%.
Yeah.
So, okay. I mean, if it ever dips below 4, they'll refinance it and they'll cash me out and we'll be done. And that's fine. Great. That's what I would do if I were the investor. As soon as interest rates drop, I'd either sell it or refinance it.
Well, excellent. Before we move on to the next topic, I was just kind of curious, did you ever run into any kind of significant problems that you really kind of had to put your thinking cap on to be able to solve as you were doing these different deals, or anything that you might think that new investors might run into and not be able to handle?
Yeah. One of the things that I didn't really appreciate, the different rules on, this is for that property in Florida, right? So they have very specific rules about the roof, and every insurance company knows how old your roof is because you have to pull a permit to fix your roof.
Okay.
So I went in there and I got this property, and we had budgeted for roof repair. So we collected all this money. We had the down payment, the closing costs, we had a little bit of rehab, and then we had a roof repair set aside. We take over ownership, and then we contact the insurance company. We said, yeah, here's the house. We're repairing the roof. It should be done any day now. And then they went and ran a report on the house. And they go, oh no, this is the original roof. We're not going to insure you until you replace the roof. We went, oh, that was something that we didn't expect. Um, and so, and I don't know if you realize this, but in Florida, a roof is twice the price of any other state because of all the hurricanes.
Oh, okay.
And of course,
Yep, that makes sense.
and the demand for roofers is pretty high. So we ended up getting our hands on a roofer that was willing to come out and do it quickly, but it was twice what we would have thought we would pay. But of course, we hadn't budgeted for a roof replacement at all, and so we had to borrow some funds from a self-directed IRA. I think people out there that have a self-directed IRA and they really want good use of their money, investing in some form of real estate, whether it's for buying an asset, for doing a fix and flip, whether it's for a fund, anything, it's just a great return on investment in most deals, right? Of course, you can't promise great investments on all deals because there's risks and everything. But I found statistically, at least from my own self-directed IRA, I'm getting much better returns than I ever did when it was in my 401k in the stock market.
Well, I think that gives us a good point to move on to the next topic as well, because you've mentioned that you have a venture vibes fund, which is
Yep.
is basically a syndication fund for investing in multifamily properties, right? Or correct me if
Yeah,
I'm wrong.
technically, it's not quite syndication. So syndication means I'm going to use that to buy a specific asset. So
Gotcha.
you might say, okay, well, I'm going to do a syndication to buy an apartment complex in downtown Dallas, and that's all that fund can be used for. I actually filed with the securities attorney to have a fund where I could raise capital for a multitude of investments. I can do it in RV parks, I can do it in apartment complexes, I can do it in storage units, I can do it to buy a cash flowing business. So a fund is similar to what you would like. Imagine you wanted to invest in a mutual fund where you have a series of stocks that people put into a fund, and then there's a fund manager associated with it. Well, even that fund, even that mutual fund has a securities filing, with the SEC.
Okay.
And it's no different than what I'm doing. I'm just using real estate versus, creating a
Stock
mutual fund.
options.
I'm using real estate to, to park people's money in and to find returns. And so now when you have a fund, you're really marketing yourself. You're marketing your ability to find good deals. You're marketing your ability to underwrite good deals, and you're marketing yourself as a operator that says, look, I can get you around these returns. So there's two numbers that investors really like. So what is the cash on cash? And then what is the equity multiplier? So you start spouting 2x equity multipliers to investors and you go, what? You can potentially double my money in 3 to 5 years. Okay, you've got my attention. Oh, you can do a 15 to 25% cash on cash return. You have my attention. And so, but that takes work to find deals like that. And when you find them and you provide that value, the beauty of that is now my company can take an acquisition fee. So I can take a percentage at close of escrow of that overall value of that property because I found it, I underwrite it, I negotiated it, I got it under contract, and I close. Now the beauty is then you get a percentage of the profits through those 5 years, and then you get a fee when you sell it.
Okay.
Um, so it really is. It's why I like multifamily versus single family, because I make money at the acquisition, I make money at the operation, I make money managing the fund, and then I make money when I sell the property. Now, the advantage of being an investor versus an operator is an investor, since they're putting in the money and they're taking the majority of the risk, they get a bigger share.
Hmm.
So in a really phenomenal deals, it's a 60-40 split where the investor gets 60 and we get 40, and where there's more risk, like then we start shooting up towards an 80-20 split.
Gotcha. Okay. So just to clarify, The big difference between like a syndication and a fund would be the syndication has to choose which asset they're going to fund first, but with a fund, you just raise the capital and then you choose the asset afterwards.
Yeah. I can do what's called a blind raise, which says I'm raising capital for this asset class to get these kind of returns. You can commit now, or you can do it and say, okay, guys, I've now found a property. It's under contract. Here are the numbers. Here are the value adds. Here's the exit strategy. Is it enticing to you? And 9 times out of 10, it's yes, because those are the kind of deals you bring investors. You bring investors deals that are enticing. They can go get 8% on a stock market, or they can go get 6% on a money market account. But now, if you're offering 15 to 25% cash on cash year over year, and you're offering to possibly 1.8 to 2.5x their money in 3 to 5 years, you have their
That's
attention.
pretty simple math. That's
Yeah.
definitely worth doing. Okay, very cool. I also understand that there's a difference between investing in funds and syndications for accredited investors versus non-accredited investors. Could you go over that a little bit and kind of
Correct.
explain what your fund is?
Yeah. So our fund is leaned, or is set up for accredited investors. And so when you go and you file a fund, there's there's 3 different 506 filings you could do, and then you just have to tell the attorney which one, and then you have to let them know, are you going after accredited or unaccredited investors? So accredited investors, they have $1 million worth of net worth, not including their personal residence, and so they're deemed as people that are sophisticated enough investors that they can handle an investment like this, right? And so because of that, I can go out and actively advertise. So I can go out and pitch to investors that I don't have a relationship with, and I can find investors that are willing to sit down, walk through the pitch deck, and willing to soft commit their funds, and then hard commit, meaning they wire their funds in when we're close to closing escrow. And for us, that was the avenue we went through, because we've got 15 to 20 deals in the pipeline. We need to pull the trigger like that, and we don't have time to build up those relationships. Now, in the future, we do have our sights set on a fund for unaccredited investors. The difference is I've got to know these people ahead of time. So there's got to be a 30-day relationship in there. So Nathaniel, if I met you
Okay.
today
Yeah.
and I wanted to eventually pitch you a property, I would need to get to know you and understand your investment strategies, and what you're working on and why you're working on. And then 30 days from now, I can sit down with you and go, you know what, I have a potential deal that could fit into your investment strategy. Are you willing to talk about it?
Okay. I
So,
imagine that has something to do with maybe protecting people that aren't quite as sophisticated.
yeah. Yeah,
Okay.
and everything comes with a series of documents. They have a document, it's called the PPM. It's a massive 125-page document, which is one of the reasons why you want to hire a securities attorney. But it talks about all the risks and all the potential returns, and it even talks about us as the operator and what risk there is in investing in us, so that everybody clearly understands what they're getting themselves into. So when you're unaccredited, you have to have that extra time frame to make sure they know what they're getting into, that they understand the level of risk, but they also understand the level of reward. Most accredited investors understand the level of risk coming right out the gate, and what they're really looking for is, what level of reward can I get?
Okay. Thank you for explaining that. That's a very detailed and good explanation. So, apart from that, are you looking to raise capital for your fund then?
Yeah, we're always looking to raise capital. I'm always looking to sit down and talk to accredited investors. Like I said, we've got 15 to 20 deals in our pipeline. We've already got pitch decks based on the properties we've gone after so far. So more importantly, that kind of allows us to give a broad understanding of what we're going after and why. And here's the beauty of it is, and this is something that Vina taught me, is everybody you walk into is a potential investor. Somebody you sit next on a plane, somebody that's ahead of you in line at Home Depot. Everybody's a potential investor. So when I go out there and talk to people, I lead with relationships in mind, and I want to build relationships with people because I would like the opportunity to put their money to work for them, whether they're an attorney, a doctor, a dentist, you know, um, just somebody who's worked their whole life and they've got this self-directed IRA they'd love to invest it in something. So everybody to me is a potential investor. And because of that, I have to make sure that I keep in mind that I have to build that relationship with people, because people want to open their checkbooks to people they're friends with. They want to do business to people they're friends with. So I've found the most successful way to raise capital is to build relationships, because when you need money, it's too late.
Yeah, gotcha. So you build it up ahead of time. And you mentioned like a self-directed IRA. I imagine that's one of the sources of capital that people can utilize for something like this. You mentioned how people typically invest in things like mutual and index funds, but instead of doing that, you can invest that money into real estate to get higher returns.
Yeah.
Are there other sources of capital besides, say, a self-directed IRA that people could tap into that maybe they might not be aware of?
Well, you people have other assets. People have, built nest eggs over time. There's people that have run, CEOs and law firms that have run successful businesses, and they're just sitting on this pile of cash. Another really good one is family offices. Family
Okay.
offices are always looking to diversify the portfolio within the family office. Um, Usually, you got to be a much bigger player with a much more experience to get in front of someone who runs a family office. But your question was, are there other avenues for revenue or for cash out there? And a family office is definitely one of them. I'd
Okay.
actually talked to a family office where they had set aside 20% of their money within their pool just to invest in real estate, whether it was for lending for big, massive build projects, or just for buying into funds where their money could go to work.
Okay. Very cool. Well, how would someone be able to connect with you so that they could invest in one of your projects or find out the details on those?
Yeah, absolutely. So if you go to my IG, Jason Bates Invest, I have a link tree in there, and you could go in there and you can go check out the website. The website always talking about what's going on, what deals we have in the pipeline. It also shows who our JV partners are, because we're always constantly working with other people. Because here's the beautiful thing about multifamily: a lot of people think it's multifamily because there's multiple doors, but we like to say it's multifamily because it takes multiple people to make the business run successfully. So we do post our JV partners on there, and then there's also a link where you could drop me your contact information, and then you'll start getting our monthly newsletter, which talks about, the assets we're going after, why those assets are so powerful, and how we could potentially, turn your money into some additional profits.
Awesome. Sounds like you've got some good systems to keep everybody in the loop for what you're doing as well.
Yep.
Cool. I do know that you're also a part owner of Finish Line TC Services or Transaction Coordination. You
Yep.
tell us a little bit about that business and what services you provide that
Yeah,
for
that's
there.
that's been an amazing business. I got into transaction coordination about a year and a half ago, and it was mainly for selfish reasons, right? I have my buy and hold company, and I had my Gator lending business, and I wanted to TC my own stuff. I wanted to understand what went on behind that curtain that they called the title company, right? And then I started peeling back the layer of the onion, and I started realizing, oh my gosh, there's so many ways I can help so many investors. And so I ended up getting into transaction coordination. I was doing it kind of solo for about a month or two, and then I had to decide: do I want to work on building a business, or do I want to work on building clientele? Yeah, I couldn't do them both at the same time. And
Mm-hmm.
so that's when I met the co-founders of Finish Line TC Services, Jennifer Cortez and Jay Holder, and they kind of brought me onto their team. They had all the infrastructure, everything I would need for a business. They had a website, a CRM, they had a YouTube channel, a Facebook page, a Instagram. They were funneling money into advertising and sending people to their website, and those people could, contact our services. And then eventually, I provided so much value for their organization that they made me a co-owner of it, and it's been very powerful. And we've been building up over time, right? When they first got into it, it was just about real estate investing, right, and buying
Mm-hmm.
and selling of real estate creatively. But then we've expanded into Gator and PML, and then we expanded it into buying and selling vehicles creatively, and then we expanded into buying and selling businesses creatively. So we literally want to be the one-stop shop for all things creative. And then we partner with a law firm, so now we can start providing promissory notes and deeds of trust and mortgages, for people that either the title company won't do it, or they're trying to do they're trying to do things outside of escrow. We go, great, we got an attorney we can partner you with, and we'll help facilitate that. And then we've started bringing on underwriting services, right? Because a lot of people think they might have a deal but don't know. And then a lot of people are getting into the multifamily space, and or they're trying to do a Morby method, and a lot of that requires a bunch of reviewing of the underwriting and the structure of the deal. So, like I said, we literally want to be your one-stop shop when it comes to all things creative finance.
Very cool. And I'm excited to hear you say that, because I'm actually going to be interviewing Jay Holder here on the podcast as well.
Yeah, an amazing human being. I mean, all of them. Jennifer Cortez, she's incredible. Our other partner, January Batten, it's just an amazing team with incredible synergy. And in fact, we're growing. We just brought on 3 more TCs that start December 2nd.
Cool. So definitely got a lot of progress on that regard as well. It's really exciting to see all the momentum you've been building up. So
Yeah.
I guess the last thing that I'm kind of curious about is what do you think the future holds for you guys?
Oh, the future is wide open and incredibly exciting. So a couple of things we did at the latter half of this year to poise ourselves for success for 2025. First thing we did is we hired a CEO coach. So one of the youngest CEOs of the Canon industry, or the Canon company, became our coach. We hired him as our coach. His name is Andreas Pedersen, and he really taught us how to scale our business. He taught us how to not think like a W-2 worker, but think like a business owner, meaning that, you want to be buying businesses and creating opportunities, not buying your next job. And then really showing you what that mindset is at the CEO level, so that you can set yourself up for success. So then with that, we brought in that entrepreneurial operating system, the EOS, as they talk about in Traction. We've got that for our fund business. We got that for our RV parks, and then we got that for our partnerships for anybody who JVs with us. And it just allows us the structure to truly focus on our business, truly focus on growth, and truly focus on knocking down those roadblocks. So 2025 looks amazing. We're looking to get 10 parks in 12 months. There's 2 teams working on it. We have 2 funds that are going to be supporting it. And, the idea is, you could go after 1 park, but why not go after 10, right?
That 10X thing, right?
Yeah. The ability to scale is now realistic, right? What we thought was a black box that's for somebody else. It's not for us. We just need to get a park and we need to go owner operate it. And no. Andre has changed our whole mindset. We need to buy a business, and that business is an RV park. And then we need to know how to structure that business so that we never have to step foot there unless we want to.
Gotcha.
Now the beauty about owning RV parks is we get to hang out with other people where other people vacation. So the thought of visiting RV parks is very high on our list, but we want to visit it. We don't want to go have to run it.
Mm-hmm.
So that's what 2025 looks like. We've built partnerships. We've paid for the coaching, and now we're ready to pull the trigger and execute.
Well, that's really exciting. And I'm definitely a huge advocate for hiring a coach for anything you're trying to accomplish. It doesn't matter what successful person that you can think of. Behind them, there's a coach of some form.
Yep.
So that's really cool. Definitely good advice in that regard. All right. Well, I guess before we end the episode, I just want to know, do you have any kind of suggestions for resources or things that people can do that are just getting started? Maybe pitfalls that they might want to avoid. What does that look for you as far as advice is concerned?
Yeah, that's awesome. So find one thing you want to focus on and just spend 6 months on it. And the reason why is a lot of times you don't know what you don't know. I mean, I've seen people come into the transaction coordination business. They partner with us. We work on a file and they go, oh man, that was nothing what I thought. I don't want anything to do with that. And so the problem is all of us want to do all these really cool things at once. I want to buy a cash flowing business. I want to buy a laundromat. I want to buy an apartment complex. I want to buy, an STR, and then you might find you don't want to own properties, but you might want to work for a team that buys properties. And so my advice is to find one thing to focus on, and whether it's taking a course, watching YouTube channels, listening to a podcast, reading a book, focus on that. But don't just, analysis by paralysis. Read something, take the lesson from it, or take something, take the lesson from it, and then go execute on it. And then once that makes sense to you, then come back and take the next section of the course or read the next chapter. That really has been a game changer for me, because I will tell you, I have this insatiable desire to learn. And my partner, bless her heart, sometimes she has to ground me and say, look, I know you want to learn that, but is that really going to help our business right now? And then I got to go, yeah, you're absolutely right. And even my coach told me that. He goes, look, I know you want to learn that, but is that for pleasure, or are you going to be able to monetize and do something with that? So, that's my advice to anybody out there. It's great to learn something, but just say, okay, I'm going to focus on just learning this. And if I like it, I'll keep going. If I don't like it, then I switch. No harm, no foul. But the worst thing we could do to ourselves is to not execute, right?
Yeah.
So, you're just a dreamer unless you take action, right? And it's great to dream. I dream all the time, but then I go, okay, how can I make that dream a reality?
Yeah, that's excellent. It's an interesting thing that I went through as well, because like I said, I was in an analysis process for quite a while trying to buy a house, and maybe part of that came from the fact that I had an injury that was caused by another person, and maybe it was just the fact that I was kind of shy. But at a certain point, I started to realize that shame and self-doubt aren't motive forces. They prevent you from doing anything. And so if you're in that place, you have to learn how to get around it and start moving forward.
Right.
Definitely excellent advice on that.
Yeah.
I didn't start. Yeah, go ahead.
And more importantly, you have to acknowledge that self-doubt and those other things you mentioned are there, because you have to say, okay, yeah, it's real. I get it. If you try to brush it aside and say it doesn't exist, it'll come back to haunt you. It's okay to acknowledge it and go, okay, I got it. I'm going to set this over here, but I'm going to focus on this over here, because the thing we do to ourselves that's the worst thing we can do is we live in the past, right? And we go to try something new and we get reminded of the 20 other things we tried before that didn't work. Well, I say, okay, yeah, that happened, and you learned from it, right? But now we've got to start from today, and then what are we going to do going forward? Right. So as long as we're always forward thinking, there really isn't anything to stop us. There'll be those little obstacles and, the universe throwing curveballs at us to say, are you really serious? Jason, is this really what you want? And then I go, yeah, that's really what I want. And I keep moving forward. And the universe goes, okay, well, then I'll give you what you want.
Give it to you.
So
yeah, definitely. I think the big thing that shifted for me is after I went to the Own Your Future event with Dean Graciosi, and one of the speakers talked about do it messy, do it scared, do it imperfect, but do it anyway.
Yeah.
It's like I just needed permission to be able to do it imperfectly. And that's what allowed me to start moving.
And that's a great point. And when I owned a martial arts school, that was the same thing I did. As I told everybody on the mat, I give you permission to make mistakes here, because out there, I don't want you to make mistakes because I don't want you to get hurt. But in here, I want you to make all the mistakes you need to, so that you understand what's going to go on out there. And so that's a great point. And here's the thing is, when we were kids, we made mistakes all the time and we laughed it off. And then when we became adults, all of a sudden we told ourselves, well, we got to get it right the first time. And if we don't, that's not for us. We move on to something else, because it's easy to do the stuff we're good at. It's not always easy. Or I say it should be, it's not as easy as we want it to be. And so if we understand and give ourselves patience and grace and treat ourselves like we were 5 again and go, it's okay not to get it right the first time. It's okay to learn your lesson, and it's okay to move on.
Definitely. And I think it's been a really big transformative journey for me, even in the last 1.5 to 2 years that we've done this. It's really enriched my life. It hasn't been free of problems, but those problems have meaning. And I can see the progress as I look back, and it's been incredible to do. So if you're a person that's struggling to move forward, just give yourself some grace and just keep putting the effort in and keep taking action. You're going to figure things out.
Yep. Yeah. No one ever said I became successful because I quit.
Yeah. That's like the number one guarantee that you will not succeed.
Yeah.
All right. Well, I really appreciate you coming on the show today, Jason. And this has been the Pot of Gold podcast, where we talk about finances, wealth generation, and real estate investing. Thank you for tuning in.